Good morning, everyone. Good morning, welcome. Thank you for joining us today. Looking forward to sharing some great information that all shop owners and shop managers should know, all about the R&D tax credit. So we'll let, just give another minute or two. I see people streaming in here to the room. We have a good crowd today. Yeah, if you don't mind, if you're interested in just dropping into the chat where you're joining from today, it's kind of fun to see where everyone is connecting from all around the country and possibly the world. But thank you for joining us this morning. All right, as those come in, let's go ahead and get started here. So welcome everyone to this webinar about the R&D tax credit. It's when I started doing some research on this for a blog post I wrote recently, I was amazed at how few companies actually apply for the R&D tax credit. So it's really, it's low-hanging fruit, and hopefully we'll share some things today that allows you and your shop to go take more advantage of this. So let's see here. We got Aurora, Illinois, Oklahoma, Texas, Iowa, Chicago, Foothill Ranch, California. That sounds like a nice place to be. Lafayette, Louisiana, Cajun country. Right on, Jim. All right, excellent. Well, let's move on here to our next slide. So my name is Paul Van Meter. I am one of the founders of ProShop ERP. It's my honor to have several great guests today, including Vanessa from Moss Adams, Tim from Dillon Aerospace, and Robert from IDL Precision. So Vanessa is going to share, she's the expert in this, so she's going to share a presentation in just a moment here about all the things you all need to know about this. And then Tim and Robert will join us kind of in just a kind of a roundtable discussion talking about their shops, what they do in their companies for applying for tracking information and record keeping of the R&D tax credit. And then at the end, we'll share a little bit about, so here's the actual agenda, a little bit about how ProShop helps to collect that data, and then we'll get into some Q&A at the end. So let's keep moving here. So just a little bit about us. So ProShop actually started originally as a machine shop. So my partners and I started a tiny little shop near Seattle, Washington here in 1997. We funded by a second mortgage, actually, by the guy standing on the right-hand side there in the back of this little warehouse. And we started building our company, knocking on doors. And we actually started using Excel spreadsheets, which we actually used to collect time tracking data and costs for R&D tax credits, because my business partner was fairly savvy on that from the beginning, thankfully. But as we grew and got more sophisticated in our needs, we couldn't find any software we thought was worth buying to run our shop. So we decided to hire a software developer and start building something for ourselves that eventually turned into this thing that we call ProShop. Over the years, we saw a lot of strong growth, and partly funded by getting R&D tax credits back. We did that religiously every year, and that really helped to add to the bottom line for reinvesting in the company. So our first actual software customer was in 2008, and actually Robert, who's joining us today, he was one of our very earliest customers, because Celthera Marine was a customer, a machine shop customer for both ProCNC, our shop, as well as Robert's shop, IDL Precision. And so after Self said, hey, this software works really great, can we share it with some of your other competitors? We decided that was probably good for where our sort of plans were starting to develop about possibly starting a software company. And so it's been an honor actually to work with Robert and his crew for almost or over 6 years now, I think. So, and then we eventually sold ProCNC and launched ProShop after we did that. So a little bit of our background. Let me go ahead and stop my sharing and let Vanessa take over here. And we will actually learn all the good stuff we want to learn today. So Vanessa, take it away.
Okay, great. I'm happy to be here. Hi, everybody. So today we're going to be learning all about R&D tax credits. So first, let's start a little bit about Moss Adams. So Moss Adams is a full-service CPA firm. We do audit, tax, and consulting. We started here in the state of Washington. Most of our office locations are here, expanded all along the West Coast. And we have several offices all around. I specifically work in a special consulting group for R&D tax credits. That's what I do day in and day out. And I've since 2010. My main areas of expertise are in the aerospace, manufacturing, and technology industries. That's kind of where most of my clients, the industries that they're in. And I started my career in the Big Four accounting firm and moved to Moss Adams, and I've loved it ever since. So a little bit about our agenda today. We're going to get some background information on the R&D tax credit, talk a little bit about whether your company can qualify, some examples of what qualifying activities are, and then go into a little bit more on the criteria of how to claim the R&D tax credit. So we're mainly talking today about the federal R&D tax credit. This is kind of, the big opportunity here because you get a dollar for dollar tax credit that can offset your tax liability. So for all of the expenses that we consider to be qualified, you can roughly estimate that 6 to 10% of your company's expenses translate into a credit. So that means, if you have $100,000 in expenses, you would be getting a $10,000 credit, and that $10,000 will go to offset your tax liability. So it's a really great opportunity to take advantage of. Some other things about the credit is that this is an annual credit, and there's no limitation on how much you can claim in each year. So as your expenses increase from year to year, your credit can increase from year to year as well. If you are not able to use the credit, you actually have the opportunity to carry it back 1 year to offset tax liability, or carry it for up to 20 years. So maybe if you don't have any taxable income, in the short term, in the next couple of years, this credit will continue to carry forward until you're able to use it for up to 20 years. And then if you haven't been able to claim it in the past, there is also the opportunity to amend your tax return, and you can amend up to 3 past years to claim the credit. But we can actually go back and look even further if there's the opportunity there to carry forward some of those credits that you can't claim in an amended return. So again, just because you haven't claimed it yet doesn't mean you can't, and we can definitely take a look to see how much of a credit there could be for you. One other thing that kind of came out around in 2016 was this payroll tax offset opportunity. So if you are considered a qualified small business and you're able to meet certain eligibility requirements, if you are not able to claim the normal kind of R&D credit to offset your tax liability, you're able to make an election and use that credit to offset your payroll tax. So that's your Social Security FICA tax for the payment to your employees. Now, we're not going to spend a lot of time talking about this one in particular, but it's just something I wanted to mention as another potential opportunity. If you think, oh, I don't have taxable income, this could be something that you qualify for. And lastly, there's opportunity for a lot of state credits as well. Unfortunately, Washington State does not have, an R&D credit. There's other state incentives that are around, but there's over 30 states in the US that do have an R&D credit, and each state has their own set of rules. California and Arizona are kind of the other big ones that we deal with on a daily basis. So does your company qualify? I first wanted to mention 2 common misconceptions. The first is some people think that, oh, my company doesn't qualify because we're not solely focused on R&D. I think when the R&D credit first came out, some of the kind of main industries that people think of are maybe the technology space, software, or maybe even life sciences, pharmaceutical companies. But you don't have to be in any of those industries to qualify for the R&D credit. This is open to all. So wherever experimentation occurs, whether it's on your shop floor, R&D may be found. So it's kind of the first misconception. The second is that companies think, oh, I need to be developing something super new and innovative that's never been done before. That's also not the case. As long as it is new to your company, it can be considered R&D. You still have to go through a trial and error process of experimentation to figure out whether something's going to work. And, if it's new to your company, that could be something that there's potential dollars there. So below here are just kind of some common areas where, what we look for to see whether a company is eligible for the credit. So are you devoting time and resources to developing something new or innovative? And again, something new to your company, something innovative to your company, not necessarily the industry. Second, are you improving an existing product? It could be something that maybe has been out in the market, but maybe you're making some significant improvements to it and releasing kind of a version 2 out. That could be something else that qualifies. It can be a process, formula, techniques, prototypes. It can even be software. So the manufacturing process in itself, that can be the R&D. How are we going to get, this machine up and running to produce this new part? You need to figure out that manufacturing process. So that can be something that qualifies as well. And if you hire designers, engineers, or scientists, we look at job titles and say, hey, what is this person doing on a day-to-day? Are they contributing to the R&D process? And that could be directly contributing to the R&D, or it can even be a direct supervision role or a direct support role in that process. So lots of opportunity there to see whether. So here are some examples of activities, specifically as it relates to the manufacturing industry. I'm hoping as you kind of scan through this list that you'll be able to see, this is something my company does. The first one here is probably the biggest one that I think gets missed, and that's what I was mentioning with the new improved manufacturing process. I think this, just because you're not developing a part in itself, sometimes people think the part is kind of the product is what's R&D, but that's not the case. So definitely thinking about the time that you're spending improving that process to make it more efficient, which is something that can qualify. Are you developing special tooling as part of this process? We see that a lot with machine shops. You guys have your own tooling, or maybe you have your own molds that you're creating. That's another area, a big area. So prototypes is also one that I wanted to mention. Are you building a prototype to make sure that this can work before you go into production? There's potential to take kind of all of the costs related to the parts to build the prototype, the design time, if you're paying a third-party contractor to help you with the prototype, that's another area that gets missed a lot as well. The rest is, are you using new materials for your process, new improved metal forming, welding, machining techniques, new components for customers? I will go into this a little bit in more detail later in the presentation, but some people think that only my internal R&D is qualified. There's actually an opportunity to take R&D that might be related to a customer contract. We have to look a little bit deeper into that, but, don't, kind of pull yourselves into this just internal R&D. Maybe I don't have a lot of dollars there. You can actually expand that to potentially some of your customer R&D that you're doing for a customer. So this is kind of, this is not an all comprehensive list, but just wanted to provide some details on, some examples of what could qualify. Okay, So here is our 4-part test criteria. And the first and most important one is going to be technical uncertainty. So this usually relates to how kind of that, that hypothesis, right? What do I want to accomplish with this manufacturing process? What is this kind of final product that I want to make to give out to my customers? So you have an idea of what you want to accomplish, but you don't know how you're going to get to that end result. So there's technical uncertainty of whether you're going to be successful in kind of getting to that end result. The second part is the process of experimentation. So you have this idea of what you want to accomplish, but now you have to go through that trial and error process, that systematic process. Okay, is this product meeting these tolerances? Is it able to, be manufacturable on a large scale? So you have to go through that process of experimentation to figure out how you're going to achieve that desired result. The third is usually the easiest one to meet. It needs to be technological in nature. And all that really means is that it needs to be based on a hard science like engineering. We just can't take any kind of general and administrative expenses, marketing expenses, things of that nature. And the fourth part is there needs to be a qualified purpose. So either you're creating a new product, you're creating an improved product, or it could be a new or improved process. As long as you're able to show, that with the improvement that you were able to increase performance, reliability, or quality, or if it's just something entirely new that you haven't done before, that's what we're looking for here in this fourth part. So hopefully after walking through the 4-part test criteria, you're thinking there's probably a lot of things that we kind of do on a day-to-day that's meeting this kind of this day-to-day job. And that's great. So, talking to us and getting a little bit more clarity on just the different activities that can qualify is kind of what we're going for here, after you meet the 4-part test criteria. So what expenses qualify? So the biggest expense that we usually see is going to come from wages. And this is, some straight up W-2 Box 1 employee wages. So for all of your employees that are involved in R&D, and again, this can be the direct research, the direct support of R&D, and first level supervision of R&D, they can qualify. The great thing about the wage piece is that there is an 80% rule. So if you every day you're working on R&D kind of related activities, if 80% of your time is done doing that, we can actually gross you up to 100% of your time. So what this means is instead of taking 80% of your wage, we can take up to 100% of your wage. So that's really kind of where the opportunity is for the wage piece, because the people that are spending time on R&D, we want to make sure that we're capturing as many dollars as possible. So wages usually end up being kind of the biggest piece of the credit. Now the other ones are going to be supplies is probably the second. If you're involved in the manufacturing process, and let's say you're doing a first article run, all of the materials that you're using as part of that first article run could potentially qualify for credit. Then there's going to be other things kind of like tools or just materials that get used in the development process is kind of where it falls in supplies. Sometimes, depending on what you do, we can even take kind of some extraordinary utilities. And that just means, kind of the abnormal amount, maybe using too much power for something, and maybe we can take a look at some of those utilities. But what this does not include is G&A supplies. So some, office supplies or maybe, maintenance, kind of cleaning, things like that wouldn't qualify. But anything that's directly related to the R&D and gets consumed during that development process would qualify. Computer leasing may or may not be something that is attributable to you. This is just cloud computing costs. So if maybe there's a software element to your development activities, maybe you're hosting on an AWS or Azure. So we could potentially take some of this cost as it relates to R&D. And the final piece here is contract research. So a lot of the time you're hiring third-party vendors to help you with your various activities. Maybe it's design, maybe it's testing. So we can take a look at those costs as well. The only thing to say here, big thing to say here, is that we would need to look at the contracts and with those vendors. And we're just kind of assessing for financial risk as well as IP rights. So as long as the company retains that and the contractor doesn't retain it, then we can potentially take those costs. The contractors also need to be US based. So if, a lot of our companies have foreign vendors, but if the work is physically performed outside of the United States, we are not able to take those costs. And the same thing goes for employees. If you have other locations, they need to be US based as well. So I've talked a little bit about the activities and kind of how you can meet a criteria, but kind of the big thing about the R&D credit is the documentation. So over the years, the IRS has really been cracking down on documentation. So if you were to get selected for an audit with the IRS, you want to make sure that you have the documentation in place. So, one of the first key things here is just kind of figuring out, what are my potential projects? What are, products or even processes that could potentially qualify? Then you're evaluating about whether you have eligibility, and you're also talking about am I keeping proper track of these qualifying expenses? So what I usually tell clients, if you're not, a taxable income position now, is it's better to get that process in place just because, you never know what's going to happen. Maybe you have some turnover, maybe, the people, memories, you forget, or maybe things get misplaced for the documentation. So, there's a lot of reasons why I'm starting that documentation tracking and collecting now is important, even if you're not going to be using the credit immediately. Because like I said, because you can carry it forward, what the IRS cares about is when you claim that credit. So if you start taking advantage of it now, 5 years down the road, when you actually start to claim it, you want to make sure you have that documentation in place. And that's part of why it's so important. So to start, I would collect documents that substantiate these amounts. So, we're talking about getting more finance, accounting teams involved. How are things getting tracked on the trial balance, your general ledger, to account for maybe the R&D employees or those R&D expenses. The second area is going to be providing nexus between the amount that you're saying qualifies for R&D and how does that relate back to the activities that are being performed. Time tracking is always kind of a great way to do that, but just because you don't have time tracking doesn't mean you can't qualify, but it's kind of going to be the easiest way to kind of get organized for the credit. And then you have to identify and demonstrate your qualified activities. So what are some of the reports that you have in place? Maybe they're technical documents, specs. Do you have any patents that you applied for? Do you have any test documents that shows your results? Things of that nature is kind of what we're looking for the documentation. So if you have a qualified expense for a qualified activity, that could be a qualified cost, and we want to make sure that we're tracking that. So, maybe you don't have some of these things in place already, and that's okay. I think it's important just to start now to retain that project documentation. Do you have design documents, test results, any other support that's related to those projects? Start saving that now. It could even be emails, a way we're keeping track of conversations of how to move forward with the development. So just retaining those projects, project documentation is what's going to be pretty important starting now. The second area is isolating and tracking expenses that relates to R&D. So one of the things that we usually see is maybe something gets tagged as either R&D or as a prototype as it goes back, kind of through your accounting system. That's kind of what I typically see. And so as it gets tagged in accounting, it's easy to go back and pull those records later on to substantiate your credit amounts. Another way too is just even thinking about your departments. Do I have an R&D department? Making sure that we're keeping that separately tracked with those people with your time. So that's kind of the second kind of big way to make sure that you can easily pull that documentation in the future. Contract agreements, I kind of mentioned this earlier, but I mentioned there's kind of the difference between internal R&D and R&D that might be related to a customer. So for the customer related R&D, we usually request those documents. And that's because the IRS, if you were going to get audited, they would be requesting these documents as well. So we actually review the terms and conditions that are in there for financial risk and for IP rights. So if you have IP rights to maybe the manufacturing process, even if it might not be the end product, we could still take R&D on that manufacturing process. So you kind of scour through everything and look for key terms in there just to make sure that there's a position to be made that you have IP. On the financial risk side, kind of the easy way to go about it is if you have a fixed fee contract with a customer and you're doing R&D for them, that could potentially qualify. If the contract is time and materials, that's going to be a little bit harder to argue because we need to make sure that you have the financial risk involved with kind of the money that you're putting in to the development. So again, this is a key element, but just want to differentiate between internal R&D and customer R&D and the fact that we might need to look at those contracts. So keeping those as well is beneficial. So that's all for me on the documentation side. Happy to talk a little bit more and go into more detail about, some different examples and just some of the experience I have. I'm hoping that kind of switching over and talking to the panelists, I'll be able to maybe answer some more questions and kind of give some more feedback about the credit. So I will switch it back.
Well, thank you so much. That was, for a bunch of accounting speak, that was actually really fascinating. So I definitely learned some stuff. So thank you very much, Vanessa. That was awesome. I'm sure we already got a few questions that we'll get to a little bit later that came in from the audience. But let's move on now to some discussion. So if Tim and Robert, if you guys would share your cameras, come on and unmute, and we'd love to say hello. So let's start with you, Tim. Introduce Dylan, tell us a little bit about yourself and your company.
Sure. My name is Tim Temple. I'm the general manager at Dillon Aerospace. We're a small job shop located just south of Seattle in Auburn, Washington. We have a couple of 5-axis cells as well as 4-axis cells and then standard verticals. But we also have a pretty healthy sheet metal division as well, where we do the standard sheet metal fabrication for aerospace, as well as a true fluid hydroform. So that, along with our assembly capabilities, make us a small but still direct supplier to, you may guess, the big Boeing here in the Pacific Northwest. Now, as far as our use of or background, we started back in 1999. Our owner, much like Paul and Kelsey, started out with one machine and he went solo, and we've now grown to about well, we're down to about 24 employees now, but at the height, even we were about 35-man shop. But really, one of the things about 6 years ago, our owner, Daryl Sutherland, became aware of the tax credit. And he was very, very, very adamant that this was something we needed to take advantage of, because it was something he felt, number one, we were leaving dollars on the table, and number two, really helped us to be more competitive in the market by taking advantage of this credit. Quite frankly, at first, I was a little bit, wasn't very keen on the idea, quite frankly, because as you often feel as a GM, the owners too often, sometimes it feels like tangents, but this was one that actually really truly made sense. And as we got into it, even for our little shop, it equated to about a 6-figure annual savings. So it was a big deal for a small shop. We don't use ProShop, although we do think it's a great product, but we've not taken that plunge. So we have a little different method of tracking our time than what ProShop makes available. We use a separate product known as Titan Armor. And basically what we do is we have 3 parts of our organization that daily take literally about a minute to 90 seconds a day just to log what they worked on. And those areas are programming, planning, and estimating. And after my understanding of that 4-part test, those were the areas that most directly allowed us to directly avail ourselves of the credit for our organization. So what they're doing is they're simply putting in there in a third-party system notes on what they spent their time on for the day, so that we have some documentation showing in real time should we ever be audited. So they're putting, the programmers, I spent, 6 of my 8 hours working on new programs, or improving a process, readdressing a program that didn't go exactly as they planned. Because we know, at least in our part of the world, programmers are always confident that their programs are perfect right out the gate, right? That there's no better process, there's no uncertainty, but it generally doesn't work out that way. Same for our estimators. They're estimating that time, as we understood it, is really, they're out there trying to come up with how we're going to, number one, win work, but number two, a process that we may or may not actually use if we ever are awarded that work. So our understanding was we were allowed to use that for the credit. Same for planning. Initially, the planners may look at the quote, feel that based on what's going on in the shop, et cetera, there may be a different method that we might want to use than what was quoted. And that's still, until it's a proven process, at some level uncertain and meets those other tests as we understand it. I don't know if I missed anything there, but that's kind of Dylan's take on it.
Thank you for that. That's a great background. Robert, can you share a little bit about your company and how you got introduced to the R&D tax credit and what you've been doing with that?
Sure. Thank you, Paul. Thanks for including me in this. As Paul mentioned, IDL has been part of the ProShop team since 2014. And that's about the same time frame that we noticed that there was this R&D tax credit available. My partner and I both come from different areas of industry. I come from aerospace engineering and management, and he comes from finance and software. And so when we bought IDL in 2012, we're just finishing our 9th year. We looked at the work that we were doing from the standpoint of, if we're making parts for customers, not from the standpoint of the R&D. My background in engineering and aerospace, it was more of independent research and development that was done, and that was much more technically minded. But when we started understanding better how R&D can be applied and is applied back for tax credit purposes, we started noticing that a lot of the work we were doing could in fact apply to this R&D tax credit. So as Tim mentioned, planning, programming, and estimating are definitely areas, but in addition, we do a lot of work with our customers in their early design for manufacturability. We work with our customers on prototypes, and we have a whole prototype division that all they do is short run, first generation parts. Sometimes there's not even a drawing, they just work off models. And so all of that work can qualify for this activity. And then in addition, every year we're looking at our technologies and saying, okay, how do we upgrade? How do we try new things? When we got into multi-pallet horizontal machining, there was a lot of new development that we had to do, new fixturing, new understanding of how we're cutting and new programming. So a lot of that work fell under that. As we went from 3 to 4 and then to 5-axis machining, all the development that we did and the fixturing that we did fell under that. And then, as I said, we do a lot of new first run parts for our customers. And as that was mentioned earlier, that has a significant opportunity to capture that risky, if you will, first parts that you're trying to do well on, but as everybody knows, sometimes the first part doesn't work out the way you expect. And so there's risk in running those parts. So we do have to divide our time between the production and continuous contract work that we do and the development work that we do. And we keep track of that so that we can record that later. As Tim said, it is a significant amount of opportunity. We have at our height, we had 70 people. We currently have a little over 50 people working for us and about 35 CNC machines. And so a fair amount of that is production work, but a significant portion is still devoted to the first run, new rev, or prototype work. And as Paul will talk about in a minute, we use ProShop. We, being an early adopter of ProShop, we like to use the different tools that are in there, and we use that to help track the work orders that are done under the development activity so that they can qualify for R&D tax credit.
Awesome, Robert. Thank you very much for that. And yeah, I have a couple of questions actually myself that just kind of speak to both what you and Tim talked about, and even a little bit of what you mentioned, Vanessa. So during some of my own research, I read that if you're say you're going to get into 5-axis machining and you don't have any of those, and you need that to get new work or new types of parts that you can't previously make now more effectively, is the research to say go to a trade show, or just the time investment to research new machines, is that something that would qualify?
Yeah, I would say that I think the research that's done to consider various alternatives kind of in the beginning of the process could potentially qualify as part of your time as an employee. So factor that in as part of kind of that wage piece that I mentioned. But yeah, any kind of research, and if you have to do testing, maybe you have to buy some of them, test them out to see which one's better. And that time can qualify too.
Okay. Have Robert or Tim, have either of you ever tracked that sort of research time and research costs for new equipment? I know obviously once you get it on the floor and you're proving it out and trying new fixtures and new programming methods, but anything on the research side from you guys?
I'll go first. As far as the research, like trade shows, never considered that. That's actually one that escaped us. However, as Robert mentioned, like when we put in our new 5-axis and then fixturing, and it required quite a bit of research in how we were going to approach because of the kinematics of that machine. We did charge that, which again was a significant amount. Because tooling up a machine is a great cost. So that's again was a huge help in offsetting the cost of bringing those machines online. But no, never considered the trade shows, although I'm pretty confident that would be a great argument with.
Yeah, I mean, I read it in a magazine on this specific topic. I think it was more a fabrication magazine, but yeah, I'm curious to dig into that more myself.
Yeah.
Well, the only time that we did was the customer asked us to greatly reduce the part of a cost that they were making. And so we decided to offer an idea of casting, starting with a casting. And so we had to do a lot of research into what kind of casting is appropriate. We went to a trade show specifically to listen to a casting company, and we had some casting parts made. And so that is the research that we did for that. So we felt that was applicable to the work that we're doing.
Yeah, great example. So I'm curious as it relates to sort of collecting this and then working with someone like Moss Adams, Vanessa, because I believe both of you are Moss Adams clients. I know ProCNC, we were a Moss Adams client. You guys did a great job for us. So how would you recommend shops think about just working with their tax professional if they don't already?
Yeah, I mean, I definitely think going to your tax professional and just asking about the R&D credit and kind of just see what they have to say. I mean, I think that's part of it, is that it does get missed a lot because there isn't that expertise a lot of the time for knowing more about what qualifies for R&D. But yeah, the first step is just talking to your tax provider just to see kind of what they have to say about it, and getting some more information from them for how to claim it.
So yeah, I think Tim, I know what you're going to say.
If I might interject as well, we dealt previously with a relatively large CPA firm here in our area, and their majority of their practice, it turned out, and we had been with them for years, were physicians and other professionals of that nature. They weren't really familiar with the manufacturing sector. So when we first approached them about the R&D tax credit, they really didn't have any real expertise in that area, and quite frankly, didn't really know anymore as much as we've even learned in this conversation today. So that really necessitated us switching, which eventually led us to Moss Adams 3 or 4 years ago. So point there was just because who you're speaking to may not be familiar does not mean this is not a very legitimate and potentially cost savings benefit that you should make sure to find people who know what who are experts in this area, because it's a big deal, very big deal.
Yeah. Any thoughts on that, Robert?
No, it's true. We, having not even knowing about this, we were working with a small CPA when we first bought our business. He wasn't familiar with this, but then it was brought to us by actually a third party that basically knew of us, called us up and said, "Are you guys getting tax credit every year?" And we said, "No, we're not doing that." And they educated us about this. We worked with them for a couple of years before switching over to Moss Adams. And it was eye-opening in terms of the opportunities and the value, because it's a tremendous savings. And it's not that you're getting anything less, you're not getting anything more than what you've earned, because the government wants to encourage us to do this kind of research and to better ourselves in terms of our production and our capabilities. And so this is a great way to invest in your company and have the resources to do that.
Yeah, that's great. I was just talking recently to another client, small, I think about a 15-person shop in Idaho, and they were at a local manufacturing trade show, and there was a company that was speaking on this, and they also previously had their CPA was not advising them about this, so they learned about it at the trade show. Then they really looked into it, and they now, Vanessa, if a company is not doing this today, but say they do have reasonable time tracking records or other types of records, how can they, can you go back a few years? Can you go back like a year or 3 or something like that?
Yeah, so yeah, you can definitely go back, and there's different ways you can go about it. For amending a tax return to claim this, you can go back 3 years. So that's kind of the immediate opportunity there to amend and claim the credit. But you could even look this like 10, I've done credits that have been 10 years and, you're figuring it out because the credit carries forward. Now, there's a little bit more analysis involved because you can't amend those years, but you can still claim it and carry it forward so that you can still utilize it today. So.
That's great. Yeah. So if you're today working with a company that does not know about this, definitely don't be satisfied and definitely seek out more information. And if you're on sort of the West Coast of the US, you get, where does Moss Adams operate primarily? West Coast?
Yeah, primarily West Coast, but we have offices in Texas and Arizona, and Washington State's kind of where we started as we expanded down into California. We have people kind of everywhere.
Awesome. And when I was also sort of approaching you guys to ask about this, you guys have some great, I think, white papers and other things on your website. So maybe we'll make sure to get some of those and send them out with the recording to all the attendees so they can review those materials. Well, awesome. Well, I'm going to share my screen again here and just share a little bit about how this process works in ProShop for collecting that information. So yes, how does this help? So I guess fortunately we came from the place where we were a machine shop. We were doing all this work. We got educated on the benefits of the R&D tax credit. So we sort of built in some tools to help us do this much more easily. So the first thing is with our work orders. So as kind of has been discussed, if you have work orders for a brand new part number you've not made before, or maybe even just a new revision of a part that you've been making for a while, and that revision requires changes to programming, changes to tooling, to fixturing, all those types of things could potentially qualify. So in our work order type field, we have a number of different categories, and the ones that we always used at our shop, and I believe this is what you guys do, Robert, is certainly prototype jobs. That's a no-brainer. And we also, similar to IDL, we had a dedicated prototype department. So we had 5 or 6 machinists that did nothing but quick turn, one-off work. It was always brand new. None of it was repeat. And so pretty much universally, everything that they worked on would qualify. But even on the production side of the business, if we had a job that was brand new or a new revision, we would tag it with this work order type. And then we also developed this field we call work order class, and R&D tax credit is an option that you can put into that class field. So there are, so if you with whatever system you're using or whatever method you're using to track information, if you can just label, your jobs in the right way to allow you to then do a search later for that information, that should make that data collection considerably easier and presumably much more robust for auditing purposes. So when we had an example of work orders with those tags, you can just quite simply run, say, a work order query for all of 2020 with work order class or work order type. And then that would come up with a list of potentially, hundreds of different work orders. And then we'd use a particular feature in ProShop for the labor side of the portion. We have a little option right down here called breakdowns, and you can choose time tracking from that list. There's a number of items, but time tracking here on this list. So let's say we had a query of 500 work orders that all had one label or another that might apply. From that entire list of 500 work orders, we could just click this link that said time tracking, and that would bring up an additional query that showed all of the time tracking for every single work order of that entire list. So, it might take a minute or so to run that report, but you could then potentially come up with thousands of time tracking entries. And then from all those entries, we can then filter those down into things like planning, programming, inspection, troubleshooting, things that, very possibly would be the categories of work that would apply for that credit. And then from there, you can just click the save button and save it as a CSV file or a PDF file or whatever format works best for your tax professional, and just export it and send it out to them. So in a real world example of this, we had a customer in Chicago, and in fact, it's Jim Carr from the Making Chips podcast, but he has a company called Car Machine and Tool. He knew that ProShop had some of these features, and they had been categorizing their work orders this way for their entire year. And just a few weeks ago, he actually emailed us and said, "Hey, I got to collect all this, but I don't remember quite how to do it." So my partner Kelsey, our CEO, got on the phone with him about an hour later, ran a bunch of the reports, and within an hour had exported all the data that their tax professional needed for that report. So anyway, so it can be, when you have the right, I guess the takeaway universally is if you have those good records, then it can be considerably easier to collect that data. In fact, I guess in a little bit of a comparison, that customer I mentioned in Idaho, when they learned about the R&D tax credit, they started applying for it. But in their old system, it used to take about 4 days of him to collect and run various reports and collate it. And he told me just recently that with ProShop, it takes him about 4 hours instead of 4 days. And also just sort of as a number to throw out there. So they are also about a 15-person shop, and he said their return on the R&D tax credit was over $100,000. So substantial money. That's enough to pay for a new machine or pay for an employee for an entire year. So definitely not something to leave on the table. Another thing I wanted to mention is whether you're using something like ProShop to track it, or just sort of the concept here of when you're doing any kind of activity, even if it's not for a client, if you're doing any kind of internal research or improvement activities. Let's say you have a production job that you've been running for a while, but your customer is asking you to reduce the cost. That if you have to make new fixtures or come up with new programs, new cutting tools, right? Just if you're researching that stuff, and you can issue an internal work order for that type of work and capture all those costs, all that labor, and then document those findings. And so I know like in our company, whenever we got a brand new CNC machine, we would issue a work order for tracking the entire process of that machine, right? So we'd issue it right at the beginning, and then we'd do our research, we'd get salespeople, we'd look at the machines, we'd pare it down to which machine we wanted to buy, and then we would use other operations on the work order to make sure we scheduled the riggers and the electricians and maybe the contractor to come pour a new concrete pad for us. And so all of that work, we documented that way. So just another thing there. Yep. So again, work order type, work order class, easy in ProShop. So I'd love to just kind of summarize here before we get into the Q&A. And again, there are a couple of questions, but now is the right time. If you have some more questions that you want to ask, please go ahead and drop them into the Q&A, and we'll get to those in just a second. So the real takeaways here would be, understand what those qualifying expenses are, from what Vanessa shared today or other research you do or talking to your tax professional, and then develop a system for tracking those costs. The point that really kind of hits home for me is that if you just build a system at the beginning, of the year, of just how you're going to simply label jobs or have people track time, it really is not a great expense to actually do all the tracking, right? It's just a matter of getting that process in place, educating the employees on what they need to do to participate in their role of it, how impactful it can be to your company that they participate in this, and then do that work, document all the expenses, and then at the end, collect that data and get all that money back. So Q&A, let's go ahead and get into this. So if you want to come back on screen. So Chris asks, what if someone only spends about 25% of their time on R&D? Can we include 25% of the W-2 wages?
Yes, that would be correct. Yeah, so, even if you're only spending a small portion of your time, that's how we calculate it, 25% of that W-2 box one wage for that employee. Yeah. Okay.
So, and I guess on a similar vein, if you have someone that say is a prototype machinist and all they do is ever brand new work, do you need them to track time that same way? Or if that's all they do, can you just write off everything that they do, all the expenses for that employee?
Yeah, I think the piece that becomes important, and this is also kind of part of the tracking, is even if they're spending the majority of their time on development activities and supporting that development, we still want to have project nexus. So that means whether we're talking about a part or a process, we still want to know how their time is spent during a given year. So yes, one piece of it is, okay, how much of your time is R&D? But the second piece is, the nexus between the activity and that project or that product or process. So.
Great, awesome, thank you. And then a question from Tyler on average, how much money have you seen companies save using R&D tax credit as a percentage of gross revenue?
So let's see. So I think it definitely varies, but I mean, I've dealt with credits that, maybe it's $10,000 to credits that are, a couple $100,000. So it can really range, and it really comes down to what are your potential qualified expenses. And I mentioned earlier, if you're able to do kind of a rough calculation, kind of 6 to 10% of those qualified expenses is usually kind of around where your credit ends up. So I give the example, if you have $100,000 of expenses, roughly $10,000 would be your credit. So you can do kind of even simple math on your end to kind of figure out what the potential opportunity could be.
Right. Okay. Yeah. I mean, I know that company that I spoke with in Idaho, they were a relatively small shop, probably only doing, $2-3 million worth of business, and their credit was 100 grand. So that's a pretty sizable percentage. And I know Tim, you said yours was definitely in the 6-figure range. So definitely a reasonable set here. I have another question here. If I do a run of 50 parts that are all a brand new revision, how much time could be written off? Programming and the time associated with a new setup, or running the entire quantity?
Yeah, so it has to go back to what, where does the technical uncertainty end? So yes, if you have to run, up to 50 parts or even up to, 50 times, whatever it may be, before you can actually move on and say, okay, we got it, let's put this into production. All that time prior to, that results can qualify. And I guess one other thing to say too is when we're looking at employees and how much time they spend, we look at it for the whole year too. So even though maybe on a certain project, maybe they're spending 100% of their time on that one project, we have to kind of take a step back and say, okay, of the entire year, what portion of their time is qualified? So that's one other thing to think about too.
Great. Another one here. What about setups for production jobs that have run before? I believe I've heard that for any time that the first article inspection process would qualify.
Yeah. So if you're still kind of doing that first article run, and you're right, you might have to go through that whole process to see, and then figure out, oh no, that part didn't work out, and kind of go back and do it again. All of that can still qualify because there's technical uncertainty, and you're going through that process of experimentation. It's drawing that line between when, oh, this works, let's move on and make, thousands of those. When it gets to that production phase, we can't do that anymore. But anything kind of leading up to that is fair game.
So to get into that question just maybe a little bit more, in a typical job shop, if they're doing repeat orders of the same parts, let's say they're doing it for the 10th time, but they still at the beginning of that 10th run, they need to re-inspect the process, make sure the parts are actually coming out right. Do you think that time, maybe it just takes a few hours to do that, but would that time qualify, even though it is a repeat job?
So yeah, potentially. I mean, if there needs to be maybe some improvements made to that process because it didn't quite work out the first time, that time technically worked out, yes, that could qualify.
Okay.
It gets a little bit more gray when you're talking about, oh, it's already
sure.
We're doing it.
Yeah, a little nuance there, I can imagine. Well, that's all the questions we have. I do have a comment from Justin, super informative. Thank you, Paul, Vanessa, Timothy, Robert. I'll definitely be looking to becoming a Mouse Adams client. So thank you, Justin, for that. Well, great. Let me just move on to the last, just the final thank you and contact information. So yes, thank you again all so much for, I think there's actually, it says thank you, there it is. Thank you so much for spending time with us today. If you're interested in learning more from Moss Adams, Vanessa's contact information is right here. Ours is on the right, and then the IDL and Dillon Aerospace websites down below. And of course, our loveyourerp.com website down at the bottom there. is always fun. So thank you all so much for your time today. I really hope that was useful. My intention with this was really to just primarily get this information out there because I know there's so many shops that could qualify and they just aren't doing it. So hopefully that was useful to you. Thank you all so much for your time and expertise today. And thank you all again, and we'll see you on the next one.
Thank you.
Thank you guys. Bye-bye.